our investment thesis. And I will preface this as well to say that this is a complex product. You have to know what you're doing. You have to be an experienced investor. There is risk involved in this trade, but we think that basically this will really give us a very good ability to capture what we're targeting in the market. So, what we've constructed is an enhanced growth basket, and what this means is basically there is a bit of leverage involved. So how it works is you can borrow on a loan, and it's 100% recourse on the notional amount. So what this means is, for example, if I spend $16,000 in cash, I will borrow $100,000 on the loan. You're not liable for that $100,000. However, you can lose the cash outlay for $16,000. The product is currency hedged, so it's going to be in Aussie dollars. You can use it in your self-managed super. It's available for both retail and wholesale investors. However, for retail, you will have to go through a target market determination. We've got to make sure that you understand what risks there are, and you can lose 100% of the capital that you put in. So that $16,000 that you put in, there is a chance of loss. Now, there's no margin calls, so the maximum loss is whatever you put in for the cash outlay, but you are not liable for that $100,000 of that loan. The other benefit to this is also that there is a tax ATO product ruling, and what it says is basically that we borrowed on a loan, and we can deduct the prepaid interest. So it works very similarly to negative gearing in comparing to property. In Australia, you can deduct your prepaid interest against your taxable income. So in certain situations, obviously dependent on your personal circumstance, you can claim some of it back when it comes to tax return, that initial outlay. In the basket, there's going to be two underlying ETFs. It's going to be the GLD and SLV, so gold and silver. And the price is going to be marked to the worst. So let's just say, for example, let's walk through the scenarios. If gold and silver goes up let's just say, for example, you have two. Gold goes up 60%, silver goes up 80%. It will take the worst leg of the pair. So gold at 60% will be the worst pair. But what it means is that if it goes up 60%, you will get $60,000 of profit back. So you've made about 300% return on investment. Now, if it's at 11%, what it means is at the end of the investment cycle, at the end of 16 months, you will get $11,000 back. And what that means is you've lost about 31% of your investment. And then in the worst case scenario, where if gold or silver, the worst leg, is worse than zero, so less than zero in terms of on the day when we strike the product, you will lose the $16,000 capital. In terms of the deduction, how it works is basically when it comes to tax time, depending on your tax bracket, let's say, for example, if it was 30%, you'd get 30% of $16,000 back, and that reduces the initial outlay that you have to pay. So, it's despite the risk, there is also good reward. So if this investment thesis goes well, and it, basically if gold and silver goes up 60%, you're going to have a decent amount of returns that come back. However, you must understand the risk. In terms of risk reward, it's quite good, but there are risks that you will lose the initial outlay. So in terms of the full product disclosure, if you are interested in this, we will have a full PDS, a full flyer, with the ATO ruling attached as well, so you can have a read in terms of what this all means. What do we mean by store of value? Basic store of value is an asset that preserves purchasing power over time. It protects your wealth against inflation and currency debasement. So, there's some terms that we have to go through, but in terms of the best risk to reward way to represent this view. This is a very smart way to do it. Your downside is basically capped at what you put in for the initial outlay. However, the returns are uncapped. So if you guys are interested, please message us. The advisors will be reaching out if you are, and we'll determine if you are the right fit for this product. So we'll try to get involved with the investment thesis. Thank you guys for listening.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.